Supermicro Computer continues to get hit with negative news, and honestly, today's update had me doing a double take. But before we get into what could be a server-side problem, since we're talking about a company that misses deadline, don't miss your chance to hit that subscribe button and thumbs up. Unlike some SEC filings, this can be done right away. All jokes aside, let's get started, and at the end, I'll share my thoughts on whether this is a buy or pass for me.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So take a seat because we need to talk about what's happening with Supermicro, and oh boy, there's a lot to unpack. While they just reported some impressive numbers with revenue between 5.9 to 6 billion, up 181% year over year, there's a massive storm brewing that we need to address. And if you're more curious about the actual earnings, make sure to check out my last week's video where I take a deeper dive on Supermicro's earnings. The breaking news that honestly caught me off guard, according to reports from Taiwanese Daily, Supermicro just hit a major speed bump with their Malaysia expansion plans. And this is that they are about to delay construction, which has triggered what I call a domino effects of problems. So here's the meat of what's happening. First, YTL Group, which is a massive player in the AI space, was planning something huge. We're talking about a 1,600-acre YTL data center campus in Malaysia. Just to put that in perspective, that's like 1,200 football fields. They were planning to build one of the world's largest AI supercomputer using Nvidia's DGX GB200 and VL72 full cabinet AI servers. So obviously, that's a lot and a lot of AI server revenue. But here's where things get really interesting. When Supermicro decided to halt their Malaysia factory expansion, YTL didn't just sit around. They quickly pivoted and moved their entire order to Wistron Group in Malaysia factory. This is a huge deal for 3 reasons. Number one is obvious, the loss of current revenue, but more importantly, the loss of future revenue. We're just not talking about just one order here. This was potentially a long-term partnership for what could have been one of the largest AI installations in the world. That's reoccurring revenue walking out the door. Number two is market perception, right? During their earnings call, the CEO of Supermicro mentioned that they're continuing to grow Silicon Valley, in Taiwan, and now especially in Malaysia. But this news directly contradicts that optimistic outlook. It's like saying you're expanding your restaurant while closing down your kitchen at the same time. Number three is an obvious competitive position pressure. This situation basically handed this other AI server manufacturer a golden ticket into the high-end AI server market. Now let's look at what management said during their recent earnings call. CEO Charles admitted their utilization rate is relatively low, maybe only 50%. Isn't this somewhat of a red flag for anyone? If you're already at 50% utilization, why halt an expansion that a major customer was counting on? Something obviously doesn't add up here. One thing in forms of Supermicro's perspective is maybe they just might not get enough Nvidia chips right now, and because they might not get many Nvidia chips right now, there's no need to build out more capacity at the moment, and maybe they can halt it at the moment until we get better updates or guidance on what's going to happen with the company. But if the reports are true and the customer did switch over, that was probably something Supermicro was not expecting. But now let's break down their Q1 numbers. Revenue was $5.9 to $6 billion. Remember, Supermicro does not have an auditor at the moment, so they can't give us the actual numbers. They have to give us a range. And this range was well below the guidance of $6 to $7 billion. Cash position of $2.1 billion, total debt of $2.3 billion, and gross margins of roughly 13.3%. Now, during the call, the CEO kept emphasizing their relationship with Nvidia, saying they're asking Nvidia every day for new chips. The company is really trying to maintain confidence for investors, stating that they have the deepest of relationships with Nvidia at the technology level. And they've confirmed that there's been no changes to allocation. And that's been a big topic, right? Because many are fearful with all this drama affecting Supermicro that Nvidia might not send chips to Supermicro and might just send it elsewhere. But Supermicro was trying to kind of bring confidence back to investors But we keep hearing more and more news that are contradicting what Supermicro says. So this is definitely an interesting time to be a Supermicro stock investor for sure. But there's also the thing when customers like YTL are jumping ship, does it matter how good your supplier relationships are because you're missing out on that potential future revenue? Now there's a lot of other elephants in the room. Supermicro is facing multiple challenges. A November 16th deadline with NASDAQ or potential delisting. Now this deadline here for November 16th, they could just submit a kind of compliance plan and that deadline could be extended a little bit more. So it's not like the final answer needs to come out on November 16th. It's more just a plan that the NASDAQ has to accept for maybe a potential extension to whatever's happening on. Number two, they're still searching for a new auditor. Number three, the preliminary Department of Justice investigations that could be brewing. And number four, now we have that major customer potentially relocating orders. There was one positive development, if you want to consider this a positive. The special committee investigating the company stated that they found no evidence of fraud or misconduct on the part of management or the board of directors. However, they are recommending remedial measures to strengthen internal governance. That's like saying the house isn't on fire, but maybe we should install some smoke detectors. And again, these are by their kind of special committee that they appointed. It's not like it's some form of third party at the moment. So maybe take these answers with a grain of salt. Looking at their guidance for next quarter, revenue was 5.5 billion to 6.1 and non-GAAP earnings per share of 56 to 65 cents. This is actually lower than the quarter they just reported, which isn't great news considering we're in the middle of an AI boom. Here's what really concerns me. Their inventory levels, they're sitting on about $5 billion in inventory with days of inventory at 85 days compared to 82 days last quarter. In a normal market, this might not be concerning, but when you're facing potential delisting and customer uncertainty, that's a lot of inventory to be holding out. So would I buy or pass right now? Look, Supermicro has some incredible technology, and they're clearly a major player in the AI server space. Their liquid cooling technology is impressive, and they're still growing significantly year over year. However, there are just too many uncertainties right now. The pending NASDAQ deadline, no auditor yet, major customers potentially moving elsewhere as evidenced by the YTL situation, lower guidance for next quarter, high inventory levels. I think the prudent move here is to wait and see how they handle these challenges. The November 16th deadline is crucial. Let's see if they can either file their annual reports or get NASDAQ to accept their compliance plan. Remember, in investing, sometimes the best move is no move at all. There will always be other opportunities, and right now, the risk to reward ratio just doesn't look favorable enough for my taste. At this point, choosing a side here is more of a gamble in my opinion because unless you're an insider, you don't know the answers to these questions. Well, that's it for today's video. Take care and see you for more semiconductor and AI news.